Well, there's always a lot of focus on what happened 2 to 3 days ago, but we have to watch capital flow, we have to watch money flow, and we have to actually look sector by sector to get a better sense of, is capital flowing back in and how strong is it. So once again, we're still a little bit on edge coming off of that big move last week, but as we're going to talk about briefly before we have a special guest at 9 o'clock, key thing here is right now people positioning ahead of September. The expectation now, we've gone from 55% probability of a rate cut in September to now Fed rate expected to go in September, 90% probability now, according to CME FedWatch. And that's important. That's very important because let's just say we get to 100%. What do you do now? Well, that's kind of the question of where the how far this rally or post-Fed meeting rally can run. So we're going to keep a very close eye on that. In addition to that, the AI stocks and the defense stocks getting a little bit of a tailwind right now. Palantir, big move, up 5-6% in pre-market after Q2 revenue hit $1 billion. Well, again, it is a reminder that these names in this space, Palantir, right, this was $40, 565 times earnings. Who cares? Just pure momentum. And don't be shocked if this just becomes the next NVIDIA name that joins the Mag 7 as it continues its ascension north. Market capitalization, $405 billion. I recommended it at 6. Palantir, everybody. All right, pay very close attention to that because NVIDIA, everything else is on board today. The other thing just to watch on the other side of this is the ongoing trade friction between the United States and India. President Trump has threatened tougher tariffs on India over continued purchases of Russian oil. That triggered a decline in the rupee. This all matters because of currency pressures, and there are a number of stocks that are trading on the U.S. market that have direct exposure. So all of those things will be in play. Before we jump into things, got a lot of people still coming in. Palantir, the deep state is growing. What's strong, what's not? DGX, CPB, RGTI, and Joby is back. Joby, because we got to just running. We were selling put spreads on that name not too long ago. DGX, keep an eye on this. What do? Quest Diagnostics. Interesting that this is coming up because I got to go get my blood drawn at about 10:15 this morning. So looking at this moving average, 20-day moving average, possible trade here, just kind of setting the stop here right back at that 50 or 20 or 50-day moving average and just hoping that momentum continues to take this stock higher. Interesting name. Can you recommend the next Palantir at a low price? Probably. What's the It'll come to me. Raphael, it'll come to me. It'll come to me. RXRX is an interesting one as well. Pay very close attention to the LABU, which is chopping around its 20 and its 50-day moving average. We're looking for some sort of direction on biotech stocks because there is a lot of chop and movement today in biotech names. I'll cover that in a moment. What's weak? Oh man, I wrote a article yesterday about a number of companies that I can't believe are public companies. Companies like Dave & Buster's, Build-A-Bear, Aqua Bounty. Aqua Bounty is a salmon harvesting company. Well, Cheesecake Factory, you should have been on that list too. Cheesecake Factory breaking under its 20-day moving average. Ugh. It just gives me a stomach ache thinking about this. Anyway, weakness on the RSI, MFI. Look for a potential test of that 20 and look for a possibility to roll back over down to that 50. We'll go from there. Cheesecake Factory, BFH, SEDH, and PARA, Paramount. Those are the names that are weakening. And your watch list for today, MGA, back in focus. We're back on the Palladium train. FSM, as we continue to focus on silver prices. KEP, VTEL, and Siri. Ooh, Siri. Warren Buffett, everybody. Siri. Don likes Build-A-Bear, and I find it to be amateur taxidermy. So I'm off board. Broader momentum, which is something we're going to be talking about regularly in the future on terms of all individual sectors. This is where we sit. So, as you know, we have a reading that we do where we subtract intraday momentum on the bell curve, and that goes negative. We pay very close attention to the FNGD to see if we are in breakdown conditions on our daily. We are currently looking at a SPY and a NASDAQ that are in the green above key support levels. Our Russell is yellow, and it's hovering right at that 20-day moving average. We're kind of hanging out right now, watching what the Russell does, wrapping up some short positions on the Russell. Took some gains. Now going to be focusing on what this market is going to do directionally over the next 36 to 48 hours. Across the board here, virtually everything was red on Friday. We're starting to see some strength returning in the financials, some strength in energy, in staples, discretionary. Real estate and healthcare seem to be the two that are holding up the most at the moment, which is why with healthcare turning positive, that's why I bring up DGX at the moment with Quest Diagnostics, looking for some strength to continue to return back into the stock after that sell, a little bit of a pullback on the 31st. Improvement across the board, RSI, improvement on MACD, improvement on ADX. Just looking to set a straight up stop and see if we can get a little bit of a pop off of these key moving averages at the moment with healthcare positive, real estate negative, positive. Technology is very strong at the very top. This is very important because I'm not measuring this solely on what we're not doing it on a weighted basis. We're looking at the number of stocks that are breaking down in individual sectors versus stocks that are breaking out. The bottom of the S&P 500 and the Russell 2000 technology has been very, very weak, particularly in the software application space, largely because of concerns about the U.S. economy and jobs moving forward. As a result of that, the question is how many people are going to be in the workforce, and these huge national companies need these big subscription services. So remember, Slack used to be a publicly traded company. There are dozens of these things out there, whether it is, again, Figma just went public last week on a lot of enthusiasm. We're watching that break down after hitting that massive high last Friday, and it continues to pull back at this moment. We got 6 minutes left before we got some visitors. Palantir, back in focus, strong momentum, and that's just kind of the way this is going to continue to go. It is just burning higher. It is very reminiscent of the way that some of these other previous Mag 7 stocks have entered the fray, and you're going to see Palantir start to get a lot more support in a variety of ETFs. Right now, overall, the number of ETFs with Palantir is at 336, according to ETF Channel. That's a lot. There can be more. So this passive investing, remember, as Palantir stock rises, and if it is a representative of an ETF, or it's representative of a theme, or it's representative of a broader index, that index needs to be weighted against. So therefore, as we push toward quarterly rebalancing, we will be looking for these ETFs to purchase more Palantir in order to match that index. So once again, looking at PLTR, don't be shocked if the momentum continues and it becomes kind of a reinforcing self-licking ice cream cone in the future as it continues to move up. AXON is up as well on stronger guidance. As I noted, the LABU, right? Welcome, everybody. If you're just getting in here, pay very close attention to the LABU today. If it is breaking above that 20-day moving average, you're going to be watching a lot of those names in the pharmaceutical space. Vertex is there as well. DuPont, BP, Pfizer, AMD, also notable movers this morning. BP had a huge oil and gas discovery off the coast of Brazil recently, and that has obviously given the energy sector, or the energy name, a little bit of a boost. But as I've noted, oil prices are still kind of breaking down, and we have seen in recent hours, a lot of focus on what is happening with OPEC into September. We will be keeping a very close eye on this right now, because with OILU, what we're always looking for is a move down toward oversold, because that becomes an opportunity for us to trade energy. We just have not had any real true opportunity since roughly April, unfortunately. So keep an eye on that. And also the Indian IDRs, particularly ones with the exposure to trade news. There are a lot of names tied to this: Tata Motors, Reliance, Vodafone, Yes Bank, and ONGC. So those will be obviously in focus. And remember, don't follow the first move of the day. Look for positioning to continue to be jockeying around. Yes, you may have the slides. We will put them up on the blog after the market, after we finish up the show. Once again, on the momentum side, it really does come down to just understanding where you sit with moving averages. I continue to always just preach, just pay very close attention to the SPY. And if you are above the 20-day moving average, fly. Wow. Visitor. Good to see you. The question is always whether or not this is going to be a retest of the 20 and momentum continues to ride higher, which is something that we have seen multiple times in the last couple of months, or if there is something bigger brewing. Right now, the way that things are working, capital in the global system continues to expand. And yes, it did feel like they were trying to suck retail back into the market yesterday. However, the confidence and focus now on interest rate policy heading into September is now going to be the dominant narrative shift that we're paying attention to. I will note that on Wall Street, however, there has been a significant shift in terms of what their expectations are. We've talked a little bit about what it would look like if the market does pull back and what signals we are paying attention to. Evercore came out with a 7 to 15% prediction that the market would correct, 7 to 15% downturn, warning their clients. Deutsche Bank and Morgan Stanley also coming out with similar projections. But the funny thing about this is that Deutsche Bank and Morgan Stanley said that it had to do with economic weakness. As I've noted, it's really about capital in the system. Doesn't really seem to matter all that much. So once again, economics, the markets are front running liquidity. They're not really front running economic news as much anymore. And in addition to that, when you look at what is being said by Evercore, they're saying that it's all about valuations, which if we were worried about valuations, this market would have collapsed into a dust heap in 2013. We continue to burn higher because of the sheer amount of capital in the system. So once again, moving forward, pay very close attention to the 20-day and the 50-day moving average of the S&P 500. Be very, very cognizant and be very, very aware of where we sit with the RSI and the MFI. Typically, when we hit both overbought on both the RSI and the MFI on the daily on the S&P 500, that can tend to align with at least a short-term top, which is exactly where we sit right now. And we'll be watching to see what this trend looks like, whether or not our ADX starts to bleed off, because if the ADX does start to fade, that is likely going to be a little bit more of a longer, higher burn in the near term for this market. We will then get out to the CPI report and get out to Jackson Hole and start to prepare for September. All right. 9 o'clock, everybody. That means we have a very special guest. Could be anybody. Oh,
Not anybody.
I'm surprised. How you doing, Blake?
Surprise. Good. How are you?
Good, good. So, what did you make of yesterday's rebound?
Uh, that it would be temporary.
Yeah, that
I mean,
seems to be the theme.
the data would just seem to support that again. That, and I brought this up as well. That as long as the dollar rebounds as well, then we're talking about. And I called 5.75% if you want to get real specific, based off the dollar's rebound. That you'd see the equities peak out and roll back down at least 5.75% in the next week, maybe two.
You had said the strength of the dollar and how that was impacting equities and how it was impacting all of the other commodity spaces. Can you just give a little bit of a little explanation of that correlation?
So the correlation is a lot more simple than people take the time to process, and that is everything that you trade on your chart is quoted in US dollars. If you're in the US markets, whether you're talking about trading Bitcoin or you're trading the S&P 500 or the NASDAQ or gold or oil like you talked about just a minute ago, or whether we're talking about Apple or Palantir as they did their announcements, everything is quoted in US dollars. So half of everything you do is contingent upon the dollar's strength and its buying power for each one of those items. So if the dollar is strengthening or weakening, it's going to have a direct impact to everything you trade in the US equity market. And so it's like we're trading with only half of our information that we should be looking at every single time we push the button if we don't take a few minutes to say, what is the dollar doing? What's the dollar's strength and weakness? And everything that we've been moving on economically or news-wise has been dollar-centric. And so why are we ignoring it when it's half of everything that's going on? So, you buy Apple with US dollars, even if you sell a vertical, you sell a call vertical or put vertical, just sell a put. You sold the instrument and got paid dollars. So now you're long dollars every time you go into a short vertical. And you're sitting literally with long dollars in your account. So you are long dollars every time you do that. When you don't have money utilized, you're long dollars. And so I think everybody that is looking for that correlation might be straining too hard to look at it because it's right there in front of you. And so that's kind of what we do is we look at this, and part of the things we do is we look for the euro as it's the number one correlated currency to the US dollar. It's 55% of the dollar index or the UUP. And so we trade that day in and day out. And so that dollar strength that we saw and that recovery that we're looking for and the technicals that we're setting up would support equities to roll up, peak out, and probably fall about 5.75 or more on indexes and about 7.5 to 10% on individual equities.
When the dollar on July 1st, one of the key indices that I'm watching, or one of the key funds I'm watching, is the UUP. It hit the lowest level, hit its lowest level since late 2023. So is this rally or this bounce back in the dollar, is it driven simply by being oversold, or do you think that this is the start of a potential rebound in the dollar that could obviously impact the broader economy, or forgive me, the broader equity market?
I would say it's probably going to be a little bit more broad as far as its impact. And part of the reason why is because the reason why it sold off was overextended across the board, not just in the euro. UUP again is 55 for those that aren't aware. It's 55% of that is euros in that weighting. And so when we look at it, it's not just the euro. And the US has held its interest rates higher than what everybody else has. And the fact that it's sold off, it's primarily, I would argue, that people are saying, oh, it's because of the tariffs and the uncertainty that pushed people away from the US dollar. And it's not, even if you're saying it's a vote against the bonds, is anyone else better? And so it does feel like broadly, economically, fundamentally, it was pushed too far. And so the recovery is probably going to be a lot longer type of recovery in this move. And we're seeing that, in the fact that gold didn't shoot through the roof when the dollar weakened. Gold went into a holding pattern for a very, very long time. So I think it's broader. I think it's the recovery is also going to be broader, which means the US dollar is going to probably be one of the favorite currencies and probably the reason why crude isn't a buy. And, I saw the breakout and we went from 68, I say 68, 78, and we only went up to 70, 71. And we reversed all the way back through that 68 and finished out at 65. So I think crude's showing it. I think gold's showing it. I think the euro's showing it. And across the board, I think this is a lot bigger impact and a lot longer recovery than what we saw.
So where do you think there will be opportunities over, say, the next couple of weeks?
Well, the biggest opportunities are going to be what we do every day. And there's about 14 if you would have taken the overnight stuff just last night. And 12 out of 14 were winners. And so every time is about $100 to $125 every single time that button, that bell rang, I guess you would say, as far as what we do with the beacons. But over the very long term, like I said, I think the dollar is going to recover at least up to about 101 as far as the dollar index. If you're talking about the UUP, I would be looking at, what was the number? 28 was what we're looking at.
If you want to pull something up on the screen, please feel free.
Yeah, let me do that. Make sure I have the power. All right. Since you like the UUP, I'm going to go with UUP here. I was explaining.
And just to remind everybody what this is an ETF.
Yeah.
It is a bullish fund ETF for the US dollar. Pretty easy thing to trade, just given the fact that it's pretty liquid and has a pretty good little options chain to utilize if you don't want to have to pay $2,762 for 100 shares. You can control about 100 shares heading out about a month, maybe for 70 bucks.
Yeah, and nice thing is it is almost perfectly like 90-some% correlated to the dollar index, which is the broad instrument. So not all ETFs tie as correlated or as tightly to it, but UUP is excellent for that. So as we're looking at this, what I'm looking at short term is this monthly monkey bar at 101. And so we're taking back to May. And you talked about the move in oil since April.
Mm-hmm.
And we look at the next target, that brings us back to the beginning of April.
Right.
And so that correlation is going to be seen over and over and over again. And the UUP is going to do the same thing. We're talking about 28, and then I'm talking about going back to 28.50. And 27.50 to 28.50 doesn't seem like much, but it's 4%.
Mm-hmm.
And so a 4% move up in UUP is going to have that direct impact to US equities, to an inverse of about 2.5 times. So if the dollar gains 5%, you're going to go 2.5 times lower in the instruments. Now, this is a lot of brightness, right?
Well,
Turn your retinas off.
let me just take a little bit of a step back and ask you a question.
Okay.
So, I mean, imagine that I've never seen any of this before. You've been looking at charts for decades, and it's the first time that I see something like this, and you're seeing these tops. You're dissecting it very, very easily. Where do I even start when I'm trying to assess these types of moves and what to make of them?
Well, so if you're interested in what we're doing right here specifically, we got the long-term stuff that I do every single Monday.
Mm-hmm.
I like to look at the big picture and on Friday for the long term. So Monday and Friday kind of bookend it for some longer term scenarios. And then during the week, every single day here in just 20 minutes, we're doing a private trading room with our beacons, and we find trades short term, very simple, very direct, closes in, closes out. That's what I can tell people: close in, close out. You hit your target. Close in, close out. You hit your target over and over and over again. But so for those in this main room, join me on Monday and Friday every single week, because it's the long-term, big picture for where these are going to go over time and how this dollar impact can impact everything over the longer periods. If you're looking at just making some money, getting in and getting out, and as noisy as this beams of light may be, it's just because we had a really narrow range yesterday. So we went to huge range and then tiny range. And so it created multiples for us. But every one of these, this was a winning trade. This was a winning trade. This was a winning trade. And then we had one loser. And this was a winning trade, and this was a winning trade, and a winning trade, and a winning trade. And this one wasn't a setup. This one was a winner, 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 winner. And that was all we had. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, like I said, and one lost.
All between a range of less than a cent, right?
Yeah. Yeah. So the currency market, the euro US dollar, unlike the UUP, which is $27 for the ETF, this is traded in 50 to 1 leverage. And so what we look at is we look at decimalization of the euro versus the US dollar. So it takes $1.15 to buy a euro. And so the 115.700, we trade in these little tiny levels here. So you watch this go from 700 to 705 or 700, 701 or 71, like that, like it changed just now. And that's what we call 1 pip or 2 ticks. And that 1 pip is worth $12.50 for trading this in the futures market.
Okay.
And so we get 8/100ths of a penny, and it's $100.
Wow.
So
all right, that's amazing.
Yeah, super fast.
Yeah. So what are you tell me, we chatted last week, we were talking about the 10% per month club. What can you expect?
10% a month. So we did our master class last week, which is just explaining the beacons, just these yellow rectangles here. We start the mastermind or the boot camp, whatever you want to call it, the mastermind or boot camp this Wednesday. It's the first session of the training, and it goes for 12 weeks. And it's going to go in detail through each of the beacons. We call these the beams, and the beams, how they turn into the trends as we watch for those. But we have 12 weeks, and I'm a little excessive on how detailed we go. I don't hit the hour and cut it off. I usually go over. People know that maybe it's because I just like to talk, but I don't know. I like to make sure we have the information and be able to get all the way through there. So we have 12+ plus hours of education starting this Wednesday, which will begin with how we anchor the beacons, how we use these, how we modify them, and really how we set up the very beginning steps of our trade every single day, where we have frequently dozens, but we're only going to try to capture the ones in a 2-hour time window. But that begins this Wednesday. And you have access to the masterclass from last week, so you can go back and see how we did that. And then our private trading room, which is every single day at market open. We spend an hour just trading this one chart over and over and over again. Percent of what amount is of the balance of the account being traded in futures. That's our goal, is to make 10% a month. So we're going to be using, I reset my account, pulled it to a $5,000 account because I think that's very accessible for most. And so we're going to be trading a $5,000 account live. It's my money. We're going to watch it. We're going to trade it. And we're going to do that every single day for the next year. So 12 hours of education, 260 hours of application, and more, because we're going to do every single day, every day.
Awesome. Everybody can click the link in the chat. Blake, what else are you focusing on with the 10% per month club? I know you're talking about a lot of hours of education, but what can people expect just in terms of the day-to-day in the room interaction?
Yeah. So every day, what I'm doing is I'm posting these. What you see here now, like I said, this is excess. Usually it's just 2, but I'm posting these every single day the night before. So you have all night, 12 hours ahead of early notice, letting it come to you, or letting price set up so that we're ready the next morning. And so then in the morning, what I'm going to do is I'm going to leave here and I'm going to jump over there, and we're going to give them the new levels because we've modified and changed those. And then we're going to trade. If there's a trade, we're trading it in that next hour. So I'm sending out the alerts, I'm sending out the levels, I'm sending out a chart, I'm sending out an image, I'm sending that every single day so that you have it 12 hours ahead of time. And then we're setting up the trades, and then we're going to do the trades together. And
everybody, get in the chat, click the link, check it out. And again, if you've never traded futures before, Blake couldn't make it any easier for you if he tried. And I know he's tried because he's been doing this a long time. He knows exactly how to build these type of educational courses, and he's led so many cohorts over the years. Blake, I'm going to give you the last word, and then I'm going to take it back over and just take everybody into the market, into the open.
Yeah. So really quickly, one thing is that Don also did a futures 101 class that you get with it. And so you get Don's view on futures and all the basics, and establish the core if you haven't done futures before. And the other thing is, yesterday we didn't have a single trade. Today, theoretically, we've already had 12, and we haven't even started the day. And so there's plenty of opportunities, plenty of risk managed, controlled winning that we've been able to do. And as long as you can trade it futures, whether it's with Schwab or anyone else, whether it's an IRA or regular account, you can do this. And we control the risk, so don't need to be concerned at all about the leverage. We will help you and make sure you manage that risk day by day for those wins day by day.
Awesome. Well, again, this is perfect for people who are active, people who want a lot of action, and people who want to be able to take advantage of what the market gives you, because once again, this is not something that's going to be bound, over the period of 9:30 to 4 o'clock. This is a global market that trades 24 hours a day, 7 days a week, which is exactly why Blake likes to be as active as he is. Blake, thanks so much for joining us this morning.
Thank you. Appreciate it.
All right. All right, everybody, just going to take 5 more minutes and just kind of walk you through a couple other things that we're seeing in this market and how we want to be able to dig a little bit deeper. One of the key things that we always talk about is looking for stocks that are potentially on the verge of breaking out or breaking down. So one real quick screen for you, and we got a couple quick questions from people saying, how do I pick the stocks that are breaking out or breaking down? These are based on momentum, so largely built around RSI, MFI, MACD, and ADX. And on the weak side, same thing, looking at stocks that are breaking under key moving averages. Within this watch list, there are a couple of things. One, we're always paying very close attention to insider buying. We're paying very close attention to breakouts in commodities. We're paying very close attention to just short, small cap stocks. And in addition to that, I'm always looking for stocks that are in that F and Z score world, where we have companies that are a strong F score, which is the Piotrowski F score, which is a 9-point scale that tells you whether or not management is doing their job. So this is a quality score. Then we take a value score called the price to gram number ratio. That is the intrinsic value of a company. It is based on Ben Graham's very important, very critical, the Intelligent Investor book. Then we look at market capitalization. Make sure that we have companies over $500 million. Then we also add something as simple as the SMA. We are looking for stocks that are on the verge of breaking above its 20-day moving average, particularly its EMA. But that's neither here nor there because we're going to have to qualify everything as it arrives. The final part of this, really quickly, is to look at price gram as a percentage of P, 40%, and we get rid of the financials and we only focus on US-based stocks. These are the names that will hit the list today. And again, we're always looking for names that have not been on this list before. Very important. You're looking for companies to pop on this list after their earnings reports because F scores are largely a reflection of earnings, right? Return on assets, return on equity, obviously whether or not they're buying back their stock, etc. So we got to pay very close attention to that. The names that are in range of their 20-day moving average: General Motors, CureVac, Taylor Morrison, and Tri Point Homes. So we're seeing some of the housing names get back in focus, and Permian Resources has just popped up on this list. I have not seen that before. So PR, very important. If we get into a situation where energy stocks do rebound a little bit, we are looking for PR to rebound as well. You leaving? All right. I will see you in a little bit too. Bye, honey. Have a good day. My daughter is going somewhere. I don't know where. So you're going to the doctor? Okay. Do you want to tell everybody? Okay. She is going to the doctor's, and then after she gets her shot, my wife is taking her to Starbucks. So, Permian Resources, KEP. So all of these names are in focus, obviously, given the fact that they are within range of their 20-day moving average. And if they can break that range, that just becomes your stop. That becomes your stop. So PR is on the list. Looking forward to trading that, especially if we can get any rebound in energy prices and oil prices soon. On top of that, just keep a close eye on General Motors and CureVac, which we mentioned yesterday, CVAC. Don't know what you do. Don't care. Just care that you're hovering at that 20-day moving average. And we'll see if anything. That means they got bought out. That's a buyout right there. IRS. What do you do? Ooh. Okay. Real estate in Argentina. Not going to do that. I'm going to keep my eye on those energy names. All right. It is 9:19. This show's off the rails. I hope that everybody has a very good day. I will be back here at 11:30. Again, if you haven't, click the link for the 10% per month club with Blake. His masterclass is his first session's coming up very, very soon. Had a huge night last night, 12 for 14. Don Kaufman's going to be putting on some music in a moment, and he's going to be going live in about 10 minutes to take you through the market. I hope everybody has a great day. If I don't see you later today, tomorrow, 8:45 for Market Masters. Have a great day, everybody.